Has the market changed its mind about what the Fed may do next?
We have got to get inflation behind us. I wish there were a painless way to do that. There isn't.
I think this is a two-part policy mistake of historic proportion.
I think the odds of a recession in 2023 are very high.
I think you should offer the American people an apology.
Okay, so, all right, thank you very much. This is Financial Stockholm. I'm Christopher Crystal, and we have two colleagues joining us from H.I. Newman Credit Fund. They're going to talk about the fund and what the advantages to it would be at this time in the markets. So with that, I'll go ahead and let you guys introduce yourselves. So thank you.
Yeah, thank you very much. So my name is Laura Baldin, and I'm the head of sales and marketing for Hedge Invest. My colleague.
My name is Tommaso Iacone, and I work with Laura on the investor relations side here at Hedge Invest.
So H.I. Newman Credit Fund is a fund of ours, is on our Irish umbrella, which is called the Hedge Invest International Funds PLC. This is a Ucits fund with, and we might call it a liquid alternative strategy, since it has long-short credit. We would tell with a multi-strategy approach. In this slide, we summarize the, say, the four main buckets of strategy for the fund, even if then you will see there are also others. So the fund is a pure long-short credit fund working so with a fundamental perspective on corporate side, and he likes to have long but also short position. So this we stress it because it's not a long short with a long bias, with longs into corporate and short into index, but it's a truly long short also. So he might express also short positions into a corporate where he sees, I don't know, accounting problem or negative catalyst. Then the way he decides to build the position is also quite sophisticated. So, but in general terms, the idea is to find a fundamental story for the corporate and then to take position either long or short. This is covered by the part of which we might call special situation, because as I was saying, there is always a catalyst for the position, but also for the banking capital. The banking capital might be an important allocation of the fund, but it really depends from the period. So in this point in time, the banking capital came back as an interesting allocation. So I mean, the manager worked on some story into the banking capital. We might tell about Credit Suisse recently or Monte Paschi di Siena. So there are stories for the financial system which are at the moment interesting, and so there is an allocation.
So on that, what's your allocation to the Scandinavian banks?
We don't have any at the moment.
You know, we have one of the best capitalized banks in Europe.
Yeah, of course. I mean, the manager is very, again, there is always, it doesn't do just the work for having a positive carry. So he needs a real catalyst and to see a real capital gain. So I didn't follow, I mean, the story of your, of the issues, bond issues of your bank, but maybe everything is very solid. So at the end, there is not a super big upside. I don't know at the moment in terms of capital gain. Probably
they might want to take a look. We've got a weak currency right now, but we have we've shown some strong earnings on the banks. And, but we do have a slightly kind of depressing or depreciating mortgage market, which makes up the bulk of their income. So I'll let him go through the books, but I just wanted to point that out.
Yeah, thanks. Cool. The other component, say, driver of performance might come from the macro credit plus trading and hedges, meaning that the fund manager has some strong view on macro, and so he can decide to use derivatives mostly to have I don't know, positive or negative view on directionality for interest rates. It's possible that use options for a view on euro versus dollar, or maybe is concerned on China, so he might have a CDS on China or a CDS on UK. So into the macro credit part, there are many things depending on the period. Lastly, it was long bond, short BTP. So it does a lot of work also on the government issues. And so that's something that really characterize at the end of the day the performance of the fund. So you can say, really super summarizing, that there is a macro bucket that is very similar to what macro fund do, and then there is a fundamental corporate approach. This is what Filippo Lanza does. We didn't do the introduction to the manager, so I jump at the end. Filippo Lanza is the manager for the fund. He's an Italian guy, but based in London since, I would say, 25 years, or something like that. He started working for prop desk of investment bank like JP Morgan, Deutsche Bank. He was also at Lehman. So, I mean, he's born as a prop trader, and then he went for being an hedge fund manager. So he worked at Ferox Credit, and then he decided to fund his own company. And this was 2008, so he built Numen Capital, and he launched the first hedge fund, Numen Credit Fund. It was the end of 2008. He had great performance, really. In 2009, he made like 200%, so a really great performance. And then with us, the Ucits fund, as I said, at the end of 2012. He works with other two people into the investment side, and then of course there is this the other stuff. So 3 people for the investments decision of the fund, and he is the portfolio manager with the last the final say on the positions.
I got you. So he works, and then he has 3 credit analysts working with him.
Yeah, exactly. Here then in the remaining of the presentation, these few pages, you have some specific for each of the bucket we just mentioned before, with the sizing, with the liquidity checks. So there are all the specifics, but maybe now we can skip this. Of course, special situation. So single position on a corporate have some limit between maximum 5% of net exposure or maximum 10% if there is a relative value approach, meaning maybe it's long, but it's also short, and so short with some edges, but there are specific risk limit for each of the bucket to control the overall volatility of the fund, which is around, say, 6% annualized. With the aim of having interesting performance. If we jump to the performance of the fund, you see that the manager did well at the beginning of his story. Then he had some more difficult year between, I would say, mostly 2016 till 2019. Why? Because of course it was the later stage of QE, and he started very early to think that QE was too protracted, that valuation were too stretched, that interest rate were too low, while they went even negative, as everybody knows. And so in those years with very low volatility in the market and just probably the need to be long and stay long, he suffered. He suffered a bit, so he wasn't able really to produce the performance that once the market has changed and the environment provided the dislocation, as from the beginning of 2020, you see that the performance changed completely. Said that, today, overall, the fund annualized with a 4% net performance, but with different years. So we want to stress that this is a fund that should work very well when there is volatility in the market, dislocation, and the ability and possibility, say, for the manager to do well both on long and short, because it's a long short.
Gotcha. Yeah, I see there the Nordic exposure.
Zero.
Yeah. So
Nordic, we don't have any, as you see at the moment. We have, this is end of October, very, I mean, a significant short on Britain and on France.
So he's primarily fundamental based.
Fundamental base, yes, fundamental base, absolutely.
I think that's very clear when you look at that performance and you see, and then you look at the country exposure. He's looking at the fundamentals, what the GDP is going to be.
Yeah. It's very focused on fundamentals. Say more trading oriented for the macro derivative component, and very fundamental with catalysts for the corporate side. That's it.
So he has a global mandate, correct?
Yeah. Yes.
And about the Asian exposure, because I mean, if you take the fundamentals and you take the macro concepts, Europe is we're in a decline. We're not building energy. You guys know all about that. You're right at the heart of it. You have industries shutting down because of the cost of the energy. And the traditional path to wealth has been a stable, secure energy. And then the more efficient you make energy, the more you use it. So that's why we've had a growth in consumption of it. Now we're reducing our energy at the behest of the government. And companies like BASF, one of the largest European employees, are shifting operations to India. And a parallel company to it would be Dow Chemical in the US. And they've decided to build their own power plant in Louisiana. And, to compensate for this, you see in the US and Georgia, they're taking Norwegian battery power companies to build power grids for batteries. Really doesn't matter whether you're looking at the renewable or nuclear. But the point is, where you're building power is where you can build energy. So Europe is not building power. Europe is not building pipelines, except for Norway to Poland. You guys had the pipeline refused. And you see China and India, they're building something like 55 or is it 77 nuclear power plants over this year and next year. And then you see kind of countries like South Korea, which have 46 power plants that are nuclear. They're gaining all the business. So is he looking at Asia?
Yeah.
Well,
I think he's definitely looking at Asia, but I think on the energy side, one of his biggest player in Europe has been also in France. So looking over EDF.
Yeah, of course.
So the manager is very convinced that there are cracks in the system, as obviously the supply now is becoming. So France needs to engage in larger supply, but the plans as a structure, they're not capable to do that. So if you consider that EDF is also an overly and that it's full of debt as a company, and that the government had to rescue. So there will be cracks in the system, or at least there will be a problem. There is still a problem in Europe, and that is not going to end with the only supply from France of nuclear energy. But then when it comes to Asia, then I think the strongest position that Filippo and Newman has is on China. So they've been heavily short on the country. They think they've done that through exposure with banks, so shorting banks that were very exposed to the real estate market. So the manager has a strong view on that, especially given research that is done on the numbers of the population. So he thinks that the population in China has been actually overestimated. That's an interesting view.
Yeah, that is.
And on the other side, the facts suggest that, obviously the real estate market is very close to bubble territory. So I guess when it comes to energy, I think he's probably looking more over to Europe, and specifically
for a short side,
for the short side. And then when it comes to Asia, then its main focus has been on China. The last thing I probably would add is that on the long side, they've been looking at players that can actually solve this disruption. And one of the most interesting players has been with New Fortress Energy, which is a company that was born to export cheap US LNG in areas with high energy costs, as you can see here from the slide. So I think, you know, that comes with having a global mandate, but also being flexible both on the short and on the long side, which, you know, truly tells you that this is a true long short fund without any particular bias.
Yeah, because the US is adding 15 billion cubic meters of gas to what they've already produced for Europe. So yeah, I guess the new fortress factors into that. And the US used to be 4% of European natural gas, and now it's gone up to 25%, I think, which is roughly the same as what Norway was, but still not equating to what was coming through from Russia. So Europe, we've taken a lot from Africa as a result.
Yeah, exactly. You know, it's in line with the view that probably the best cherry picking that you can do is within companies that can solve bottlenecks in the energy market. And obviously, Europe is obviously a new market for the US in the gas market, in the natural gas market. So
well, they've been trying for what, 15 years?
Yeah. Well, yeah, but I mean, the disruption is so big that obviously, you know, it's convenient also for Europe. I mean, the straightforward contact for Europe will be with the US rather than with countries that are friends of Russia, I guess.
Yeah. I mean, okay. And then, all right. So that's very interesting with the LNG, because so he's playing it on the US side. Are there any other ways that you're playing the energy sector?
No, the two focus were these ones.
Yeah, I think
he has done something on hydrogen last year.
He's done hydrogen. Yeah, he's played hydrogen. Don't remember the name of the company actually, but he's been active there. And then, as I said, you know, just to summarize, New Fortress and EDF on the short, it will be very representative of his view. In the energy sector.
And nothing with nuclear.
No, but EDF is
yeah, I mean, EDF is the nuclear play, but not looking at like the Westinghouse or NewScale or TerraPower. None of these.
Not really.
Okay.
I think, you know, the trades that you see, the single trades on companies are also representative of his macro view, and then, you know, it's a way to express that in the context of what is happening in Europe these days.
Yeah, and what he says, of course, is that the wild card is the resolution or not of the war in Ukraine with Russia. So this is something nobody knows. Of course, that a possible resolution will change completely now the picture, but as of today, this is not really...
Yeah, it looks pretty far away. But then if you take the next step of logistics, you know, if we just talk a little more free flow about the fund, you know, you had Costco going into the Hamburg ports, where they take that 25% or just under 25% stake. Is he looking at logistics, or, you know, are they too far out of the quality range, or, you know, is there a reason why he wouldn't?
I mean, I wouldn't say that we hear about he's looking into logistics, because you have always to put together. I mean, maybe there is a macro theme. You are telling about macro theme, which are interesting, but it needs also to have the investment catalyst and a certain amount of capital gain to be possibly locked in. So in this respect, the macro, this macro theme is not today very representative, apart from what we already discussed into the positions. Is also very opportunistic. One of the trade we show you in this presentation is, for example, Twitter. Twitter has been, I mean, a position they ran in and out, as you see, from June till before the end of September, because there was a story. So it depends. It's really both, say, opportunistic, and it might work also on equity, as it was for Twitter. Macro comes in for sure, looking at interest rate, currency, possibly equity direction, but it's not thematic. It's not a thematic fund as as you might think of thematics, and so it pulls all the themes. This is not. It really needs a catalyst and is kind of possibility to have an interesting capital gain.
Okay. Yeah, but well, he's pretty brave if he went into Twitter there.
Yeah,
I think Filippo and the rest of the team, they also really like to look at the legal side of a case. So they've done that with Twitter. They do that a lot in Italy. We've done that with Monte Paschi in Italy. I don't know if you followed the
Monte
story,
Paschi?
but...
Yeah, of course. I used to work at Deutsche Bank, so
yeah, exactly. So that has been an interest. They've done the same with Credit Suisse. So, you know, for a fund that looks also at the distressed side of things, then with the flexibility of being both long and short, you know, you can look at the Wirecard example as probably the best
yeah,
one.
that was
Yeah, so well, the fund played the
yeah, we don't have the example, but
I think it's in the, I mean, it's pretty it comes up very nicely from the performance, I guess,
exactly,
which is in November.
June 2020.
Yeah, okay.
I mean, it used to be short in and out of Wirecard for a long time, as many did, but of course, you know, it was difficult to stay short Wirecard. So you have to build a position a little bit relative value. So they, right. I mean, they were able to gain on the short, and then, to be honest, they also played on the long side, because once it went to 5, they decided to go in and play it until 15, because they knew that the fair value of the default sale was higher versus the 5. So in fact, Tommaso was telling you something interesting. So they like a lot also the distressed stories. This morning we were having a call with the manager. Yeah. And he told the client about this last position he's having in France with Orpea, which is like a nursing company, and they had quite some problem, over-leveraged company, and now that the bond is gone down to 20, they decided to go in because they see the fair value at between 40 and 50. So there is this kind of perspective. Right.
So usually when the bond goes very close to liquidation value, but they see, you know, a good recovery value given the sector, then they tend to go long. In fact, in this case, I think they didn't manage to go short. So in the end, when they see that as a distressed opportunity, they switch side, and then they tend to make very good money on the long.
It'll be interesting to see how he was playing if he was shorting SBF.
Yeah.
I mean, when you mention Wirecard, it's the same kind of financial fraud. And I listened to some of the presentations, and I'm really shocked at people buying into it.
But all the rating agencies were saying that the company was fine.
That's why I bring up the Wirecard, because I don't know if you remember, but you had a individual over at DWS who was fired because she didn't agree with the rating, and it had a good governance rating, and it was in their Germany fund, and so that led to her departure. And then shortly thereafter, after the greenwashing raid, the CEO of the DWS was let go, all tied back to the Wirecard stuff. So it'll be interesting to see the shakeout on the SBF, because people were giving it a good social governance score, and you know, it was just, I mean, this guy makes Madoff and you know, other characters look like children.
Yeah, that's true. But so in particular with this situation of interest rates, Filippo thinks we will have many opportunities, I mean, to find companies in stress situations, because they have to refinance. Yep. And that's going to be, I mean, a painful process.
Yeah, I think distressed debt is going to be a big play for the next 2-3 years. You're looking at a lot of distressed companies and layoffs that are coming, a lot of businesses going out of business and struggling to survive. So yeah, I would see distressed debt as a good category. Any other points that are kind of attractive or that you guys have been able to take advantage of?
Probably the last thing I will add is on probably on the bank capital. The only thing I would add is that the fund tends to have, especially now these days, a wider view not only on the banking capital and the banking sector, but on the financial sector as a whole. So one of the biggest short position that the fund has is on the asset management side. So big asset manager, and that is aligned with the fund view on the financial system, really, where you've seen the first cracks in the British pension plan system. And that tells us that there could be a mismatch of liquidity in most of these asset managers around the world, given that basically from 2008, this big change where there's no more intermediaries in the market, it means that the lender of last resort now in the end will be central banks, but on the other side there will be pieces that will start to fall on the buy side of things, so on the asset management side, because of this liquidity mismatch, which has been accelerated after the interest rate hikes, and it also hurts probably the credibility of most of the central banks. If you look at the BOE and what happened during those 4 days in the UK, you've seen a bank that started with that started with QT, then they switched to QE, and then they've done a little bit of both. So it's I think one of the view that the fund has is on the liquidity mismatch on the asset management side, and that goes along also with potential mistakes on the monetary policy side from central banks.
Yeah, I mean, when they're not coordinated like that, you're gonna, and you don't give it enough time. I mean, deregulation lowers the taxes, which will speed business. But if you haven't given it enough time and you don't have the reserves, you're going to run into problems. And they showed that very clearly. Okay, and then well, that's very good. And then of course also with the asset management, you have that whole distribution model being turned upside down. So their earned income's going to be a little bit lower.
Of course. I mean, challenge are higher. In particular in Italy, because you have to think BTPs, I mean, yield 4 or 5%. So I mean, you have to offer interesting returns.
Yeah, it's going to be some fun times. So that's good. Okay. Can you tell us any other key things to know, or any other?
No, I mean, there is a lot to say on the fund, because as you understand, it's an opportunistic fund with also strong macro views. We think, I mean, is really it will work in a very good shape in an environment with volatility. This year, the manager will tell you that he's not happy with performance, because at the end of the day, the macro part should have been higher so that to have maybe a positive performance. So he's not very happy with the performance. We also show to investor on a monthly basis, and here you have the full year. What didn't work. So for example, this year, the corporate side, of course, the long part suffered quite a bit. It's a -11 for that component of the book. But at this point, we have super interesting to maturity and catalyst for the story. And so that's why he decided to keep on the position and maybe also to add to them while they were falling. Financial is positive because we have done well on the couple of examples we showed you, we mentioned, and macro is positive with a +6 but it would tell you, Filippo will say we should have done better on the macro. Looking forward, anyway, it thinks a lot of dispersion, a lot of dislocation on the corporate, so possibility to do well both long and short, and still some macro volatility, so the persistent possibility to do well on trading on rates, but probably also, I don't know, on the currency side. So a lot to do also on the macro. He has done a lot also on the UK situation lastly. So there is a lot to be done also for the macro side. We don't think we are going, he doesn't think that we are going back to the years of the QE, while he thinks that in Europe in particular, it's possible we will have a persistent higher level of inflation, maybe not the 11% of Italy today, but something that stays, I don't know, 4 or 5%. So different stuff.
Yeah, it looks
before.
like, I mean, you know, I think you highlighted in one of your reports about, I mean, obviously energy and inflation and the correlation. I mean, energy is your economy. So, you know, I think you highlight that. And in Sweden, we actually saw a reduction, but it's kind of a hidden number because the large component of our inflation was the energy cost. And so the energy cost went down slightly last month. However, we already saw a reduction dramatically by the average Swedish household and business. So, so of course the inflation went down, but you have a slowing economy.
Yeah.
So it's, you know, it's not exactly what you want. And our food cost didn't, our food cost is up, I think like yours, we're up 17%. And it's been pretty dramatic, but also the consumer is buying less.
Yeah.
So they're cutting down on their energy and they're cutting down on their food. So our inflation reduced, but I don't think it's a good sign.
No, probably it's not. But I mean, on the of course, you have the advantage for Filippo, we believe, is also that he already saw not a period exactly like this, because he wasn't trading in the 70s, of course, but he was trading in the 2000s, where anyway the inflation was between it was around 4%. We had higher rates, so it was a closer period to this one. So it's not, I mean, the later stage trader that started in the QE and saw 10 years of just that stuff. At least he has experience also on something more similar to this environment that of course will be more difficult.
Yeah. Okay. All right. So so it's Irish registry.
Yeah, but it's registered in, Irish registered, Italy registered, Spain, Germany. We have to check for Sweden. But I mean, it's not a problem to comply for the registration. The fund is a daily NAV weekly liquidity.
Okay. Okay.
Yeah.
That's always good to hear.
Yeah, asset under management, 150 million.
Okay. Okay, great. And then the settlement on it, is it T+0, T+1?
Yeah, that the fund, you must place the order 2 days in advance to deal. So on Wednesday until 2 p.m. to have the dealing on Friday, and then is T+2, I believe. Yeah.
Yep. Yep. Okay. All right. Well, that sounds good. Want to thank you very much for the presentation, and thank you very much for your time. So, thank you, Laura. Thank you, Thomas.
Thank you.
Thanks a lot.